With investing analysis on today's healthcare headlines, this is your market checkup. Hi, I'm Allison Southwick. I'm joined today by David Williamson and Max Macaluso, healthcare analysts here at the Motley Fool. Today we're going to be looking at progress in fat-fighting pills and examining enrollment numbers for Obamacare. But first, our top story. Abbott Laboratories announced third quarter earnings today. Net income fell by 50%, but the company still beat expectations. So Max, why the hit to net income?
Well, Allison, net income didn't really fall. So if you remember a year ago, Abbott actually had a pharmaceutical unit and they spun it off into the publicly traded company AbbVie at the beginning of this year. So if you look at the performance of legacy Abbott this quarter, they actually did very well. Estimates going into the quarter were 52 cents a share in earnings per share. They actually brought in 55 cents, so they beat estimates there. And the market also thought it was a good quarter. Shares are up around 5% the last time I checked.
David, what did you think of the results today?
Yeah, I think Max touched on a big part of it, right? Once you dig under that headline, it's tough to beat year-over-year comparisons when you give away the world's best-selling drug. But diving deeper than that, shares are up about 5%, and I think investors are really excited to see the dividend going up because it was around 1.5%, and it was actually really embarrassing compared to AbbVie, which had a nice big 3.5% yield. Abbott Labs is a dividend aristocrat, so to show a big boost, a 57% increase in that dividend is really strong for them. That now puts them on par with some of the bigger dividends in the medical device space with Johnson & Johnson, and Baxter's also up above 2.5%, which is about where this will lay. We also saw a bit of an issue, a headwind with the recall. They had some issues with the infant formula with potential safety concerns. That was definitely a headwind for the quarter, but that's obviously not going to be a problem going forward.
So what should investors keep an eye on going forward with Abbott?
I think with Abbott and with all these medical device stocks in general, I'm actually looking to see how earnings paints a broader picture. This is an industry that's been beset by medical device taxes and utilization issues, so it'll be interesting to see both in emerging markets and here what's happening. Johnson & Johnson reported a pretty good but kind of a mixed quarter in medical devices. Their pharmaceutical division is clearly their leading division. Stryker just reported today as well. They beat and raised guidance. Abbott just affirmed their guidance for the rest of the year, so that's a bump. I think in terms of Abbott, though, specifically, I'm going to be looking for more potential acquisitions. This is something their CEO is known for, and he even said he would have done more deals, but there was a dearth of assets, and he didn't like the premiums that assets were trading at. We saw Stryker buy Mako Surgical at a pretty hefty premium, so I think that's something they're going to be on the lookout for. In August, they made two purchases: iDev Technologies for $310 million, Optomedica for $400 million. So be on the lookout. These aren't really headline deals, but they're nice little acquisitions, and clearly Abbott wants to grow its footprint.
All right, in our next story, Regeneron and Sanofi announced promising results from their first late-stage clinical trial of their cholesterol drug. Max, what did we learn today?
Well, Allison, the drug is called alirocumab. It's an antibody, and it inhibits an enzyme called PCSK9. Now, this is a really exciting target that a few companies are trying to develop drugs for. And the interesting thing here is that this trial showed that it was more effective than a generic version of Merck's Zetia. Now, Zetia is what's called a statin drug, similar to Pfizer's Lipitor. And I'm sure a lot of investors know that Lipitor used to be the best-selling drug in the world. And that's because the cholesterol market is one of the biggest, and that's why so many companies are targeting this. So I think it's interesting that it performed better than this drug, because if they can get PCSK9 inhibitors on the market, I think they'll reign supreme over statins in the future. But of course, we still have to wait for approval there.
Yeah, so then shares popped about 5% so far today. Does that make sense to you, David?
Yeah, I mean, this is an important drug for Regeneron. Obviously, Eylea is their big blockbuster franchise, but with a company trading as richly as Regeneron, you don't want them to be a one-trick pony. You want to see them expand, and they do have a nice, interesting pipeline. So, this is validation, and there's a lot of enthusiasm, as Max said, around these PCSK9 drugs.
Right, and Max also said that it's a very lucrative space to be in. So what is the competition? Who are you watching?
It's going to be fierce. So Pfizer is a big pharma that has one. They've seen good efficacy. They actually had to discontinue certain patients on the drugs because their cholesterol levels fell so low. And so we're just seeing great efficacy. Amgen has AMG 145. That's further along in development than Pfizer's. They're betting really big on this drug. They've seen good results so far, so I'm looking for phase 3 results from them as well. I do have some concerns over. Let me preface this with, I think these will all be multi-billion-dollar blockbusters, so I do have a lot of faith in them, but I do wonder how well they'll replace statins, because I think at first, due to the fact that they're injected, they're going to cost more than statins, which are largely going generic now, and they're going to be potentially reserved for patients who don't respond well to the well-understood, then cheap oral statins. I do wonder if they're not going to see Lipitor or Crestor type sales numbers right away. It may take a while for that to happen, if it happens ever.
All right, in our next story, NASDAQ halted trading on Amarin today as they await the results of the FDA's advisory committee for Vascepa, their prescription fish oil drug, which we've talked about a few times here on the show. Now, if I remember right, the efficacy of fish oil, and by extension Vascepa then, is still up for debate, right, Max?
Yeah, there have been a few studies this year. There have been a few articles in the New England Journal of Medicine, a very reputable journal.
You may have heard of it.
Yeah. But if you drill down and actually look at Amarin and its drug Vascepa, the drug has done very well in clinical trials, and it does what it's supposed to do, which is lower triglyceride levels. The bear case here for investors has been whether or not triglyceride levels, or lowering them rather, actually leads to better cardiovascular outcomes, preventing things like heart attacks and strokes. And that's really the big debate going on today at the advisory committee.
So then that's the bear case. What's the bull case for this drug?
The bull case would be that, as Max said, this drug's job is to lower triglycerides. It doesn't necessarily need to be a referendum on cardiovascular outcomes. Now, Amarin is running a trial in conjunction with the statin to see cardiovascular outcome benefit, but Amarin did everything right. They went to the FDA, they got an SPA, which is basically a sign-off on trial design and endpoints. It aced those. The drug does what it says it will, so it'll be interesting to see. Goldman Sachs came out with a report that said they were slightly better than 50-50 odds. I think they pegged it at 60% for FDA approval for this larger indication, which isn't just severely high levels of triglycerides, it's high levels, and that's a much larger patient population. We're talking about 36 million people. I think that I would agree that I think they might get a narrow vote from the advisory committee. It will be a mixed vote, I predict, but I think the tougher test will be getting through the FDA itself, because as we know, the FDA doesn't always listen to its advisory panel recommendations.
So how badly does Amarin need this approval?
I think to send shares higher, it needs it. Currently, it's playing in an area where GlaxoSmithKline's Leveza, a competitor, is essentially a blockbuster drug. It hovers right around $1 billion in sales. So it has one competitor. Amarin's drug is more efficacious than Leveza. So you can argue that it should be able to do decent sales just in this arena. But if it really wants to expand, and really the whole bull case behind Amarin was that it would get this anchor indication, is what they're calling it. 36 million patients is a much, much, much larger patient population. That's how they were going to drive share growth going forward. You take a look at that would be the value proposition for an acquirer. A lot of Amarin investors were hoping their company would be acquired by a larger pharmaceutical with a statin that might wanted to pair them up for better cardiovascular outcomes. We actually saw AstraZeneca buy a competitor, Omthera, which has a similar product, but was trading a lot cheaper than Amarin. So this is an important day for Amarin. And one of us is going to look foolish because by the time most people watch this, the FDA advisory committee results will probably be out.
All right, well, then we'll keep an eye. We'll check up on that then tomorrow, or if that's when they come out by. All right, in our final story, we're going to check in on Obamacare. The Associated Press has obtained estimates of how many enrollees the Obama administration expected to see under the Affordable Care Act. That number was 7 million total by 2014. So the numbers were actually omitted from the final report by the HHS. Associated Press obtained it, I assume, through a FOIA or something like that. So far, it's been estimated that 100,000 people have signed up. So 100,000 down, 6.9 million more to go. David, what do you think about that?
Almost there, Alice.
Almost there.
Yeah, it hasn't been a great week for HHS because I know some people are claiming conspiracy that they've now pulled this or omitted this data. Obviously, the launch hasn't gone the way they had hoped for it. I think it was even glitchier and buggier on both the front end from a consumer interface standpoint and on the back end from an insurer interface standpoint that even got the Aetna CEO on CNBC the other day talking about it could take years to get the system functioning optimally. It's been tough. I think we will see enrollment, even if it's not that much right now. There's no real reason to enroll before January 1st, which is when you can first get insurance, and then obviously you have until the end of March to enroll before you get penalized. So, we're still in the carrot period, and then when the threat of the stick comes along, we may see another surge. There have been some estimates that the administration's 7 million figure is a bit on the optimistic side, and I think one thing to watch might be actually how much marketing there is around Obamacare, because I think if the numbers are lagging whatever their estimates say, we're going to see an increase in marketing around the program.
Particularly to young people.
Yep.
Get in there and buy that insurance, young, healthy people. Max, what did you think when you saw the story?
Well, Allison, sometimes when I have a question, I just ask the market. So it's interesting. If you look at eHealth, for instance, this is a company that runs its own online exchanges for insurance. It partnered with the federal government in late July. Shares are up actually more than 10% since the beginning of October, since the exchanges rolled out. And if you look at other stocks that are expected to benefit more long-term from Obamacare, look at WellPoint, for instance, up 7% so far this month. HCA, a hospital, again, expected to benefit from more people getting on insurance. Shares are up about 8% since the start of October. Now, as long-term investors, we don't normally look at a 2-week or 1-month horizon, but while the politicians debate Obamacare, if you look at what the market thinks, short-term glitches, probably not an issue. I agree with David. We have to wait a few months to see what happens.
All right. Well, we cover Obamacare a lot on this show. And if you have more questions, I recommend you check out our free report. It's called Everything You Need to Know About Obamacare. You can just send us an email to obamacare@fool.com and we'll get you that report. That's going to cover it for today. For David and Max, I'm Allison Southwick. Thanks for watching.